All right. Good afternoon, everyone. This is, let's call it your 30-second warning. Sit down, tune in, turn on. Please let me know. Just chat in. Let me know you hear me all right. In a moment, you might even see me if I'm so inclined as to turn the camera on over here. But please let us know you guys hear us all right, see us all right. Hello. By the way, chat in where everybody's joining us from. I'll start with a few informalities, and then we'll get kind of off and rolling into this today. So welcome everybody. Looks like you guys can hear me. Hey, when I say a few informalities, please chat in where you guys are joining us from today. It's my own curiosity. It's some cold places there. Syracuse, New York. It's awesome. It's cold. Hold me. All right. All right. The winner so far is Ontario, Ontario, Canada. That's not a good place. Wow, somebody's actually in St. John of the Virgin Islands. So we live in St. Croix in the Virgin Islands. It's awesome. I am not broadcasting though from there right now. I'm actually broadcasting from none other than Paradise Valley, just outside Scottsdale, Arizona. Let's get off and rolling here. Everybody good? So a few informalities. I like to let's make sure we got the camera going. All right, as I was saying, a few informalities here. So welcome. Yeah, you can see me now. I even have like a very unprofessional background over here. It's weird. Like I don't like the regular background, but it's all right. There's nothing crazy behind me other than a wall. You're not missing much with that one. So welcome everybody. Sorry, I'm just cracking up here at some of the comments coming in over here. By the way, a few, when I say a few informalities, one of the things, first and foremost, this is live. Everybody always asks me that question, is it live? It is live. Believe me, I'm reading the chat in real time. I like to make these sessions rather interactive. So if you do have questions throughout the course of our time here, sorry, I'm just dropping my seat down a little bit. By all means, ask questions. It's important to kind of interact on here. I do these while the marketplace is open because I like the dynamic nature, of course, of I love the marketplace being open. It's one of the reasons I do it while the market is open. Anyway, with that, we're going to go ahead and get started. Welcome everybody. Again, ask questions. I'll chat with you guys back and forth. If I don't answer the question during the course of the presentation, I will hit it towards the end of the presentation, just letting you guys know that up front. All right, without further ado, we're going to be talking a little bit about, of course, Ultima trades throughout the course of today's presentation. The high probability income generator. My name is Don Kaufman. I'll give you a more formal introduction as we get off and rolling though, and you are watching a TheoTrade presentation. I have to throw up a risk disclosure. So I spent approximately 15 years in the brokerage world before we launched TheoTrade. I am out of the brokerage world. We're not financial advisors nor a broker dealer at this point. A few housekeeping items. Listen, what you guys are going to learn today is a skill set. I'm going to go through quite a bit. I do encourage you, shut the door, turn off Skype chat, maybe whatever else is distracting you. Close Facebook because you don't need it. Phones on silent mode, kick out the kids, the grandkids, the dog can stay. All I'm simply saying is I'm going to go through a tremendous amount today. And you took the time to be here. Now, this is important. Focus on being here. So let's get off and rolling here. One of the things I will provide to you today, stick with me right until the end of today's webcast. We will give you a copy of our expected move indicator. Listen, there's an indicator that I mention just incessantly. I mention it on the weekend updates. I mention it on a day-to-day basis here at TheoTrade. All the trade alerts that I send out are largely predicated on the idea of expected move. So, and yes, we trade and we shoot out trade alerts constantly, but they're all largely predicated on the idea of expected move. We will give you a copy of this right at the end of the webcast. I will give you a web address. That web address you can go run to and you can actually grab a copy of the expected move. It's literally an indicator that has changed the way we view the markets. It's a $500 value. And we give this to you because, again, we use it constantly. And I think it's important that everybody know that right off the bat. And this is where I always bring up like a live trading application. The way I use thinkorswim and I use Tastyworks pretty much interchangeably. The charts on thinkorswim are presently better. Tastyworks is a much better trade engine. So I do absolutely execute and trade on both. I have no problem in saying so. I kind of go back and forth interchangeably. But yeah, everybody always asks me that. The expected move indicator works pretty much in any product here. I'll show you just something like a pretty wild move here in NVIDIA. That wild move is largely denoted by expected move. What this is here's a week where we're supposed to move within those lines. Okay, we shattered it. Here's a week we're supposed to move inside of it. We shattered it. The expected move is based on what options to pick risk to be. So if you say the option marketplace says we're supposed to move $5 higher or lower, did we really move $5 higher or lower? Go fish. That is what the expected move indicator instantaneously is able to discern. You can just visually look and go like, look at NVIDIA. This thing blistering moves to the upside, just wild, statistical, wild moves. And now it's actually pulling back. Just I based a trade yesterday that I sent out on that expected move indicator. Anyway, stick with me right to the end of the webcast, and you will receive of course, the copy of the expected move indicator. All right, let's get right down to business. This is why you're here. So we're going to discuss Ultima trades. For those of you that have been around, how many people here have actually been to a TheoTrade webcast before? Let me ask the better question over here. How many people here are absolutely brand new, have never been here before? Just a Y for yes, N for no. Brand new, okay? Anybody here brand new, like really never attended any TheoTrade? Because, all right, excellent. So actually quite a few of you. So you have no idea what you're in store for as I keep sucking down more and more caffeine over here. Well, first of all, you're in store for somebody that is a well-caffeinated individual. What we're going to discuss here is Ultima trades. And I'm going to talk about the fact that, first of all, we've been trading this style pretty much since like just after the onset of COVID. We realized there was a significant shift in trade, and we jumped right on it, and we've been trading it and talking about it now for over 2 years. It's just, we're going to be in our third year of actually talking about Ultima. A lot of people that come to this webcast are like, oh man, this guy's been talking about this for like 2-3 years. Because here's the bottom line. Works. It absolutely works. One of the first things I really like to denote to each and every one of you, what we do here at TheoTrade, okay, is completely no holds barred. And I'm going to say this a couple of times throughout the course of today's presentation. Everything that we do, we'll let you see. Okay. Everything from trades that we have on, win, lose, or draw. By the way, I promise this one's not down 1,000%. Why that keeps happening on here? I'm not down, man. I'm not down. By the way, this one is just my hedge. Anyway, completely no holds barred. To show you every position, every P&L. It's early in the year, so I don't have great P&L. Last year, in just the Theo Theta portfolio, we had well over 100% gain on some big capital. That's the bigger of the portfolios on big capital, and it's critically important. On the small portfolio, we had one losing trade the entire year. We've done phenomenally. And what you're here to learn today is discover what these Ultima trades are and why they're so ideal for the current environment. You're going to learn trading symbols that we use on a daily basis to create these trades. You're going to learn how and where to find edge as a retail trader. You're going to learn a little bit about high probability, okay? A lot about high probability. More importantly and more appropriately, you're going to learn how not to get absolutely destroyed when the markets go awry, when real risk comes. You have to learn not to take large losses. And you're also going to find out what products are the most viable and what products are a recipe for disaster. So here's a bit about me if you're kind of curious. We did have, quite a number of people here that are new. So I'll give you the nickel tour over here. Again, my name is Don Kaufman, and I throw up here in the headline, I watched order flow for 15 years. That's why I'm here. That may sound like a little bit of geeky, but people don't really know what that means. Okay. I grew up around this business. Like people always ask, how did I get involved in this business? I know people come from all walks of life and they become traders and everybody's got like this sob story. I was this, I was that, and then I became a trader, yada, yada. Okay. I don't have that. I grew up around it. I had family that were traders and market makers in Chicago. I had an uncle that built one of the largest trading firms in history. It was called O'Connor and Associates. He actually owned himself over 500 seats in exchanges worldwide. He sold it in the early 90s. It was a multiple billion-dollar deal. In the late 90s, I had cousins that traded on the floor. I was interested in it. I went to Chicago 3 weeks out of college. I had no intention of ever being in the markets. And I went to Chicago, started trading in 1998. Hit a couple of big moves in the marketplace. Short time thereafter, I was actually invited into a startup brokerage firm. The brokerage firm happened to be called thinkorswim. If you're familiar with thinkorswim, well, I think everybody's pretty much familiar with thinkorswim. I was one of the original executives at thinkorswim. I was there when we took the company public in 2007. I officially started working for them in 2001. 2007, we took the company public. I ran the entire education side of it. I also had a lot to do with design implications of thinkorswim, from everything from analytics to scanning technology on here. So I'm still very familiar with the platform. However, we trade again behind the scenes. We trade between thinkorswim and of course Tastyworks these days. And I had access, and probably the coolest thing of the entire career, I had access to client order flow for the better part of 15 years, which basically means I could see everything that you did. And what we did both at thinkorswim and TD Ameritrade, not only to build a better trading application, but to build better education. We looked at everything that you did and we know exactly what works and what doesn't. And we watched billions, okay, of other people's mistakes to actually derive what works specifically for retail traders. Yes, most of us come from the market making background. That doesn't really help you as a retail trader. Okay. What helps you is an individual that actually knows, like, if you do this strategy, will you make money? If you do this strategy, does it have success? And I'm not talking about success on the professional side. I'm talking about specifically in the retail side. And the coolest thing that you learn at TD Ameritrade and thinkorswim, we knew exactly what worked and what didn't. And again, what we're going to discuss today is exclusively based on that data. What works best for retail traders in this environment? By the way, if you ever need to get a hold of me today or after today, just support it at TheoTrade.com. We use a common inbox. So just put my name in the subject and it'll actually go right to me. So it's a little background on me. This is TD Ameritrade TV. I still do TD Ameritrade TV once a week. This is actually the last time I was actually in Chicago in studio. This is a shot of me on CNBC, just one of the more memorable ones because it was myself pitted against Kevin O'Leary. You don't get to get on with him too often. This is actually Investors Business Daily. This was actually really cool. By the way, I like this one only because it just came out a few weeks ago. So it was the December 19th. I know it's hard to see. It's December 19th. We actually took the cover on here. This has actually been the best year since I've had since 2008. That's not exactly one of the more favorable quotes I've ever had. Okay. But the cover story of Investors Business Daily was we took the cover, which I thought was very cool because we had a great year. We using Ultima. We had a phenomenal year last year. And each and every one of you can follow any of the trades that we do. All right, down to business. Volatility's arrived. One of the first things that I want to emphasize to you, okay, is volatility is here. Say it's not going to abate anytime soon. Doesn't necessarily matter what you might think about the Fed, about recession. Push all that crap aside, right? Fed pushing rates higher, contracting balance sheet, strong dollar. Listen, the dollar's backed off a lot, but it's still incredibly strong. Geopolitical risks are proliferating. Okay, all of this amounts to one thing. It just amounts to game on. Like what people don't recognize is, and I'm actually going to start. And again, I'm not a big chart guy. I'm not a big chart guy. Okay, but I want to start with the very simple context. This is the last 9 months. So just a quick glance. Okay, there's the last 9 months. It's been nothing but volatility back and forth. And I don't just define volatility by VIX, but I want you to look at something that I think is a little bit more alarming. Okay, that's the history of the spiders. So this goes all the way back to the 1990s. But what's a little bit more alarming is when you start realizing, and again, put this in perspective for just 1 second, and then we're going to move on and really get into trading. Okay, one of the statements I make in here is that volatility is going to be here for a significant period of time. It's not going to abate. Doesn't matter what you think. Okay, what do we know? We know that's the financial crisis. What else do we know? We know that quantitative easing kicked in. Okay, right here, it saved the world. Right, the TARP program, yada yada yada. Then they actually came up with QE2 in here, and then they actually came up with QE3, which was called the TWIST program, and yada, 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 yada. Whoops, we hit COVID right there, but don't worry, we threw billions and billions, and then wait, trillions and trillions. I apologize. I missed a T and went with a B, and here we are. And then all of a sudden this happened the moment they actually started contracting the balance sheet. The bottom line is this, okay? That volatility, it's not going away anytime soon. People are looking for the Fed to pivot. Fed wants out. I want to be contest. They may eventually neutralize rates, even lower rates, but the idea of easy money, it's over. It's completely over. And you better be aware, like, the last couple of times we had sell side activity, look where we ended up. I mean, that's like, what they call the lost decade. I mean, this has been just an incredible run, all, of course, financed by cheap money, which you're no longer involved in. I mean, I guess right now, Fed fund futures, 4.5%, still cheap relative to where it has been for many years. Nevertheless, expect volatility is not going to go away. Markets got real in 2022. Stock picking and Reddit boards, they're just not going to cut it. You're going to need a strategy now, okay? So one of the things I want people to understand and embrace, all right, this is not a stock picker's marketplace anymore. It's not going to be. It's not going to be for a very long time. It took me years to tell people that, coming out of the internet bubble. I mean, this, again, I started trading in 98, hit the internet bubble, but I was actually working, more on the market making side of the business at that point. But I joined thinkorswim in 2001. So it's interesting to see, because I've been through it then. I was in it, in the financial crisis. I was an executive at thinkorswim. It was wild times, trying to tell people, like, look, it's not going to be okay anytime soon. And that's all right. Right? But you're not going to be a stock picker. You can hold some stocks, you can sell some premium against those stocks. You got to need a strategy, and you just need a strategy. You got to embrace chaos and volatility. All right, bottom line. All right, you can't necessarily rely on directional bias. If you think that you're going to be right, okay, you're one news announcement away from a catastrophic, move in markets, always right now. And if you don't realize that, look, PMI came out today and scared the markets. CPI, which is an inflationary number, comes out. You have durable goods coming out later this week on Thursday. Any one of those announcements, any one of them, okay, can destroy your directional bias completely. Okay, let that sink in for a second. And we want to reduce risk while substantiating monthly returns. All right, that's it. We're going to need a strategy, regardless of what you might think. And again, there's certain things that are clearly up for argument, how we approach the markets, but there's one aspect that's not, okay? If you don't embrace volatility, okay, right now, you're going to get chewed apart, okay? You can't necessarily rely on directional bias. That's not necessarily a bad thing. You can't always say, like, I'm going to be bullish, I'm going to be bearish, I'm so bullish that I'm bearish. So, watching like, CNBC is probably not going to cut it. So if you're going to watch CNBC, just put the mute button on, and you have to be able to reduce risk right now. So you got to start to really think about risk reduction on a much broader scale. So this is what I term game on, embrace the chaos. Look, what are Ultima trades? Higher volatility has resulted in significantly more options premium. Ultima trades are designed to sell options premium while reducing risk. I'm going to say that again. Ultima trades are designed to sell option premium, okay, with reducing risk. Now, I said the O word, the cat's out of the bag. We are going to talk a bit about options today. And the reason we're going to talk about options, okay, it's a way to structurally, okay, define yourself in the business. It's a way to structurally come in and give yourself incredibly high probability. But for those of you that understand a little bit about options, okay, well, first of all, learning to sell options. People hear through the grapevine that selling options is a way to make money. How many people have actually heard that? I'm serious. Okay. Anybody? Okay. How many people have actually heard, hey, selling options is a great way to be able to make money? All right. And most people go, me. I'm waiting for all the me. Right. So it's been years and years since, a lot of people have talked about this. Now, some of you have actually embarked upon a strategy of, in fact, selling options. How many people here have tried to sell options? You don't have to show a hand, me. If you've tried to sell options, it's pretty quiet in here. I wish I had like a button that can like shock people. I mean, that would make like Zoom so much better. Okay, where's the button to shock people? Okay, wake up, dog bites you a little bit. So, all right, come on. Got to make this more amusing for me. It shocked me again, right? Makes me want to listen. Anyway, if you've sold options, you're going to know full well that there's risk. So one of the things that I just want to generally get to right off the bat is I do talk about selling options. Okay, so I absolutely do talk about selling options. But sorry, I'm getting crazy. Now I'm standing up. We're getting more active over here. We are going to talk about selling options, but one of the things we have to do is learn to mitigate or control the back end risk. Selling options can be incredibly high probability. What we do here at TheoTrade has a 97% probability of success in any given trade, which I'm going to discuss here. 97% probability of success. The first thing that you should think, what's going to happen to me the other 3% of the time? I'm serious about that too. And that's exactly what we're going to talk about. Today's session, like, listen, there's no room for, anything but, all right, as I said, this is no holds barred. We will show accounts, we show trades in here. There's nothing that I will not display to you in my own trading account. We want to separate fact from fiction. If you want to see what works and what works right now, and you want trading records and everything, we have all of it. Okay. In fact, I'll even show you. It's almost now 2 full years, almost 2 full years of data from what we term, the Ultima portfolio. And we'll discuss that here. So don't panic. Some of you know nothing about options. Listen, that's what this is designed for. If you have experience trading options, fantastic. If you don't, look to grasp big concepts, probability, risk. We're going to talk about that. Again, for those of you that have experience, you want to tune into the more granular stuff, meaning like, what am I actually doing, in context of which options am I selling? For those of you that are brand new, big concepts, logic, probability, okay? The other aspect that constantly comes up, and I want each and every one of you to listen to this, you never have to worry about the amount of margin that it will consume, okay, to currently trade options. With as little now as $2,000 in your account, you can do any strategy that I am talking about today. And again, I do not mind, as I say, I will always pull up an account and I will show you, this is an IRA. That's an IRA right there. It's tying up $1,500 and I am selling options premium in it. And I wanted to exploit that right off the bat. $2,000, you can do this. And don't people go, well, I can't do it at my brokerage firm. I will walk you through all of that. It's just so important that people see just that, right? Listen, selling options isn't about the sale of the option. It's about how to control risk when things go awry. All right, let's dive right in, okay? All right, so there's a lot of different facets of selling premium. Some people called selling premium, selling premium. Selling premium means selling options, right? But they can be called credit spreads. They can be called bull call spreads, bear call spreads, bull put spreads, bear put spreads. People have heard these terms. Some of those are buy side, some of those are sell side, but generally speaking, you call them credit spreads. There's short call spreads, short put spreads, delta neutral trading. There's mambo combos, there's conversions, reversals. There's selling naked, all of that. It's basically the exact same thing. Do not let all the vernacular get in the way. Look, selling premium is just about selling options. Now I'm going to actually take it to the easiest concept to begin with. Selling premium can be bullish or bearish, but generally what I'm going to cover today is much more market neutral. What does market neutral mean? It means I'm not going to take a big directional bias over here. By the way, our members year to date, I just took this, but started IRA in June following TotalTheo small, up 28%. Theo took my 401k cash 18 months ago, up 27%. This is back in September. I just took a little bit of a pulse on that one. Okay. Moving right along over here. Oh, this is November 9th, predominantly following your Ultima. Okay. Year to date, my account's up 30%. That was towards the end of the year. All right. Getting down to business again, probability and profitability. Okay. One of the things I mentioned a few minutes ago was that you can have a 97% probability, okay? Well, your trading is based on probability, okay? But we can create trades all day long with a 90% probability of success, but you can still lose money, And a lot of people, they come to like, webinar and there's all this hype and crap, but I want to actually get and cut away from that. I want you guys to understand, sorry, my camera's getting all blurry. I want you guys to understand 90% probability doesn't necessarily mean that you make money. Probability alone does not make you money. Okay. Everything's a trade-off in this business. And when I say a trade-off, okay, you're going to be right more often. You can be right 90% of the time. You can still lose money. Higher probability equals higher risk. Okay. I want to get into not just how to be right 90, 97% of the time. Okay. I want to get into not only how you're going to be right, but how you're actually going to keep the profitability over time, because that's what we're here for. And I want to show you something very important. Okay. We're going to discover probability and premium selling tactics. So this is the point where I deviate from any slideshow, and I'm just actually going to bring up a couple of examples on here. So let's assume that you're presently trading a $100 stock. Now, with the stock, that stock right there. Okay. Do I want to own the stock? Okay. Oh, I can't draw that one. Sorry about that. Let me fix my pen. Okay. With this stock, there we go. Stock's at basically $100. Do I own the stock? No. All right. No ownership of the stock. We're not going to own the stock. Why? One of the things you're up against right now is, I was saying this to begin with, and I'm just, this not actually a laughing matter, but at any given point in time, news could come out and the stock could drop to 90. That stock could rally to 110. It could be Mr. Toad's wild ride in here. And even though there's a rally going on over the last couple of days, like a lot of people are like, well, that's going to be short-lived. This is going to be short-lived. Listen, holding on to stock and stock alone right now, stock is incredibly large amounts of risk. I think everybody would actually agree on that. That's not what we're here to do. We're going to actually talk about what we term out of the money options that are just really far out of the money. In this case, we're going to look at a 120 call. Now, for those of you that have absolutely unequivocally no options experience, at first, we're going to talk about buying a 120 call, and we're going to pay $1. And this thing is going to be good for 3 months. Okay. All right. 3 months. So I've gone out now and I've just bought a 120 call. Some of you that are absolutely unequivocally brand new have no idea what buying a call is. You don't even know what a call option is. Okay. So let's be up to speed, okay, on the basics, and then work into the extreme. This is where if you're experienced, you're like, I kind of know this junk. Okay. That's great. For 5 minutes though, just hear me out, because we're going to go from really basic to really extreme from the probability perspective in just a few moments, because I think I look at options very differently than most are taught. Options are always going to be probabilities. So yes, this option is trading at $1, but let's actually put into context first. What is a 120 call? Well, right now you have a stock. It doesn't matter what the stock is. It could be Google. Google's trading right around this price, right? Okay. It could be Apple. Apple's not too far off this price. It could be anything. It doesn't really matter. It could be Tesla. All right. So it's a $100 stock and you're buying a 120 call. If you're buying a 120 call, buying a call gives the right to buy the stock at 120. Do you have to buy the stock at 120? No. So why are you buying the stock at 120? I'm not buying the stock at 120. I'm buying the call at 120 because the call gives me the right to buy the stock at 120. So why do I buy the call? Because I want the right to buy the stock at 20. But will I buy the stock at 120? No. What do I want to do? I want to buy the 120 call so I can turn around and sell the 120 call and just make money. So what does a 120 call give me the right to do? It gives me the right to control stock at 120, of which I don't even want to buy at 120. I just want to buy a call to turn around and sell a call. Does that make sense? You're like, oh, okay, ma'am. Think about this though. What are the chances of the stock going from 100 right now to 120? That's a freaking huge move. Huge, man. That's a 20% rally. Now, can 20% rally happen? Yeah. Look at Bitcoin the last couple of days. Things up like 40% already this year. But the point I'm making over here, yeah, it can rally up here, but it's slim. So if you think about a 120 call, it just gives you the right to buy the stock at 120. So where would you want the stock to go? You want it to go up. You want it to go up huge. You want it to go to 130, because if the stock goes to 130, you have the right to buy the stock at 120. If you have the right to buy the stock at 120, could you buy the stock at 120? Yes. If you bought the stock at 120, you could sell the stock for 130. And you could make $10 minus, of course, the dollar you originally paid. So you'd make $9. Does that make sense to everybody? This is where you're supposed to chime in, because otherwise I'm just churning time over here. Okay. I want to make sure you guys understand this. Now, we're not going to go out and buy one. Okay. Only a couple of people. All right. Just making sure. Right. The most important thing is here, again, a lot of people come into a webinar. Listen, okay. Provide you phenomenal trade alerts and so forth. But you do have to understand, like in context, what you're doing. Like, people, they hop on the webinar. Somebody already hopped in here and said, do you do trade alerts? And of course we do. We send out like, real-time trade information on all the different moves that we make and so forth. Okay. But here's the truth behind it. You still have to understand. Okay. Because if the trade alert came to you, you're like, I don't even know what I'm looking at, man. Okay. There's a little bit of understanding, not a lot, but a little bit of understanding. More or less, you have to understand the logic behind it. So what's the logic behind this? So here's the stock at 100. Now I'm going to go out, okay, and I'm going to sell a 120 call. I sell a 120 call. And for that, I'm going to collect a $1 credit. And I'm going to take that down here. I'm going to sell a 120 call. The 120 call is going to be trading for a $1 credit. And this thing is going to be good for 3 months of time. All right, so time out. I didn't buy a 120 call. I sold a 120 call. This is immediately where everybody goes, excuse me, if you sell a call naked, that would be construed as selling a call naked. If you sell a call naked, it would tie up inordinately large amounts of margin. Yes, I've heard that one before. I did spend 15 years in the brokerage world. By the way, I'm going to pick on you guys. There's not a rule in the brokerage world I'm probably not too familiar with. Like, that was the highlight of my career. I took tests. I have every imaginable license that I've done over the years. I was a Series 3, which is actually for futures, principal futures, options and futures. Series 4, which is principal in terms of options. Series 7, which is a general broker dealer. I've also had the Series 24, which is a principal options broker, or I should say a principal broker dealer. Then I had a Series 66, which is a 63 and a 65 combined, because we managed $400 million through a registered investment advisory firm when I first got involved in the business. So I know the rules. This one can tie up margin, but how about I can circumnavigate the margin? You go, how in the hell can you do that? Don't worry about it. I told you, don't worry about margin, because everybody freaks out. Now, I'm not saying this is a good trade, but I need you to understand this trade from a probability point of view. I sell a 120 call. Now, the stock's trading at 100. Okay. Now, selling a 120 call gives someone else the right to take stock from me at 120. Do I own stock? No. Do I want to own stock? No. I'm selling a 120 call completely naked. Now, I'm not promoting that that's the strategy, but I want you to understand from a probability point of view what you're up against, what can happen to you in this trade. So if I sell a 120 call, all right, the most I can possibly make is $1. That's it. I get to keep $1. I have to wait 3 months for my $1. Yeah, it sucks, man. Yeah, it is what it is. But I'll get there, because I don't want you to, be turned off by, he's only collecting $1. Okay. Thing you have to rationalize in here, what's the stock going to do? Stock stays flat, I keep my buck. Stock goes down, I keep my buck. Stock goes up, let's get crazy. Let's even make the stock go to 110. I still keep $1. Even if the stock goes to 120, I will probably wet myself, but I'll still keep my my $1 credit, right? The only way you start losing money is above 120, and 120 starts to eat into the $1. Then above 121, you start losing money. You get up here to like 130, you're going to take some big hits. But I want you to understand this from one aspect and one aspect alone. Okay. What's the probability in this trade? Seriously. Like, and people go, I don't know. Okay. Probability in this trade is extraordinarily high. It's extraordinarily high. This one is actually going to be greater than a 90% probability of making money in this particular trade. And just at looking at price and time and so forth, you can figure that out. This trade's going to have a 90% plus probability. Now, stop right there. Okay. Immediately, people look at this and they go, why are you selling options so far out in time? Maybe you noticed in my example, I sold options 3 months out in time. Typically, traders want to sell shorter dated option. Let me just cut you off right now. That's why you want to tune into this. Okay. There's a problem inherently with selling options premium. People make this mistake all the time. They use spreads and they go out, they use shorter duration options. And here's exactly what people will do. They will sell options. They will sell options. They will sell options to sell options to sell options, sell options, sell options. And one day you wake up, boom, you got hit by a truck. You never saw it coming, and you lost everything in terms that you made, and you lost at least half of your account. Anybody ever do that one before? because people do not know or have any freaking idea of what options to sell. And I'm sorry to be so, blatant with saying that. They don't understand. That's why you actually tune into this webcast. What we do here at TheoTrade is criteria. What we do here at TheoTrade about this, if I can sell an option, okay? If I can sell an option and collect a large portion of the premium, only hold the option for a short period of time, what does it matter? What date do I use? Who cares if I sell options 3 months out? Hell, who cares if I sell options a year out? It doesn't matter. There is one goal in this industry: make money. Okay. And you know what? You want to make money in here. You sell short dated options, you're going to be dead. Dead. Look, people have seen this decay graph. This decay graph is the closer you come to expiration, the faster the option decays. That could not be further from the truth. All right. This could not be further from the truth. Now, let us take you to a live trading application. I'm going to show you. All right. By the way, today, not exactly a lovely day to do some examples, but we'll go over to the spiders. Okay. If you're familiar with spiders, they're basically the most prolific product ever designed. They've already done 5 million contracts today. The spiders are a friendly place. Look, let's go 115 days out. Okay, I go 115 days out. And in this example, look, we're 115 days out. And you look at that and you think to yourself, you're like, man, that's out there. All right. So that's out there. Why so far out in time? Because what I want to do is compare 115 days out to this 87-day expiration. Imagine we could sell options with 115 days. In fact, let's go look out here. Oh, there's plenty of volume. There's plenty of volume out there, plenty of open interest. I'll throw a delta in here and let's go look for an option. This one's perfect. It's trading right at around $1. Fits my example. Okay. I'm going to make a quick point over here. So I'm going to go out. All right. Let me change up a couple things to make this very easy to see. I'm going to go out in this first example and I'm going to sell, okay, a 19th of May 455 call. Let's say we sell it for $1.05. Now, could I actually sell this option? Let me fix that. Could I sell this option right now, literally for $1.05? Yeah, you better believe it. Okay, you better believe it. In fact, okay, I'm pretty confident over here that I could probably sell it for about $1.06. So I'll route it. All right, don't jump in and route trades with me unless you know what you're doing. Yeah. So great, I just filled that at $1.06. You go, how is that possible? I just filled on the offer. By the way, yeah, it's a real trade. People always ask me, is that real? Okay, there you go. There's my execution. I'm live. I'm real. Throw this into the TotalTheo portfolio. So I just filled literally on the offer. The market's 104, 106, and I filled at 106. Okay, but I'm just going to say, for argument's sake, you can fill at 105. Now, time out. Okay, what I want you to understand, forget about the screen right now. What I want you to understand is I just sold something for $1 and it has 115 days left. And immediately people go, are you out of your mind? You have to wait 115 days. But by the way, the answer to that is absolutely. But you're like, are you out of your mind? You have to wait 115 days to make $1? That's ridiculous. It's not about the dollar. I don't care about the dollar. What can I make percentage-wise on that option in the next 30 days? You tell me, what can I make percentage-wise? I know exactly how to figure that out. If we look at the 455s, because what did I sell, right? I sold the 455s. So I sold these 455s. If we just looked at the 455s that only have 87 days out, it would tell you how quickly this option could decay. Because a moment ago, we looked at the decay graph, and the decay graph I said to you, and I was, in no uncertain terms, I said to you, this decay graph, okay, is a huge fallacy. It's ridiculous because people, they don't understand the decay graph is based, all right, on what we call near money options. I'm not in a near money option. I'm a far out of the money option. I'm going to go out 80, then 7 days. And what I'm going to look at 87 days, by the way, let me just ask everybody a question. 115 days to 87 days. How many days are in between? How many days of decay would we look at here? So what I'm doing is I'm using the 115 day. That's where I initiated the trade. I'm assuming all factors being equal, that what? How many days are between 115 and 87? There's 28 days between it. So it's just under a month. I want to know what I could make in 28 days if I put this position on, all factors being held equal, because I want to show you what decay can do in 28 days. And the answer to that is, okay, what did I just fill in terms of a trade? Okay, I just filled this trade right here, these 455s. So, okay, exactly 1 month from now, we're at 28 days, I could turn around and buy back those 19th of May options. They're still the same 455 calls. And I'd be able to buy them back, okay, for let's say 52 cents. Okay. Let's call it 50%. So I can make approximately, and by the way, I filled that thing even better than $1.05, but I can make approximately 50% in 28 days. How much risk do I have? Negligible. It doesn't matter, right, what options you've sold in the past. It matters what works right now. And what works is coming into the marketplace, selling longer duration options and bailing out of them, okay, when there's still ample time. Look, I would get out of this thing and there's still 87 days left. All I'm doing, okay, is I'm not riding the fast pony. I'm riding the slower pony, but I'm actually producing 50% returns. The other thing is that you have to kind of rationalize here. Look at this marketplace. The market right now in the spiders couldn't be better. It's at 400. I'm selling the 455s. Do you know how far out of the money it is? Do you have any idea? It's 50 points out of the money on a $400. Like the S&Ps would have to go back to 4,500 and change for me to take a loss in this trade. Otherwise, I make, okay, 50%. Does it sound reasonable? Okay, are we into it at all? Because what we want to do is, what's the way you're going to make money in a marketplace like this? And by the way, I'm just talking about selling calls right now. Could we also employ the use of puts? Okay, and the answer is absolutely, unequivocally, sure. Okay, it doesn't just work in the spiders. I could do this in all kinds of products. I'll cruise over to the QQQ, the Nasdaq 100, show you the exact same thing. Look, the Nasdaq 100. Now I could use the 87 days to the 52 days, but I'll use the 115s. I just want to show you briefly. These 115s, let's go way out of the money. Let's find an option trading right around $1. Perfect. Here, there's the 340s. I could sell these 340s right now, right around $1, right? If I did sell them for right around $1, what would they be worth? Okay, when there's only 87 days left. Go to the same 340s. Okay, what have we got? What have we got? What have we got? Look, yeah, they're worth about 48 cents. Yeah, 50% returns with trading an animal that is way out of the money. I mean, we're in the nosebleed seats. Look at the 340 level. I just want to bring up to you. Look at the 340 level. You want to know where 340 is in this chart? Here, there's 340 on my chart. We haven't been there anytime in the last 9 months. Okay, gets better. But wait, there's more. Look about over the last 3 years. Okay, oops, that's not 340. So look over the last like 3 years. I'll delete that. There's 340 right there. My mouse is pretty much on it. Okay, we'd have to actually recoup almost all the losses from last year to even get back there. Right. So what I am trying to impart upon you is literally, okay, we are selling option premium. We are decaying at an incredibly substantial rate. You're collecting 50% of the premium. Okay. At that point, what else do you need to know? You tell me. What do you need to know to make this successful? Anybody? I'm serious about that. Anything, what do you need to know at this point to be able to actually employ a strategy like this? So margin, okay? Margin is actually least of your worries, because I'm going to show you right now. This basically is the strategy, and it's only tying up $1,500 a margin. I'll make that a little bit more clear, okay? What we need to talk about is the risk side of it, the management. That's what it comes down to. This trade, like people always say, you know, what is Ultima? What is Ultima? Ultima is a hell of a way to be able to make money, but selling options far out in time, it's like taking a different vehicle. And by the way, I know that, there's Facebook groups and all this stuff that revolves around short duration options. I'm going to tell you, if it worked, okay, I would be doing it. It doesn't work. You can't sell a short duration option, okay, and be successful. You cannot beat the market making firms, and that's who you're competing against. If you look at this, I want to show you something absolutely wild in here. If you look at spiders, okay, just bear with me on this thought. If you look at spiders, 5.2 million contracts have traded today. I'm going to show you something interesting, okay? These are the options that expire literally today. Look at the volume on them. Do you see anything interesting? Look at the volume. It's absolutely magnificently large. You want to know why? Because every trading firm on the planet, okay, they want the fast moving options. They want the fast moving options because they have a significant and definitive advantage over you. One of my areas of expertise, I will always tell you unequivocally, okay, what is going to work on the retail side. There's no if, and, or but about it. Market making firms, they use algorithms, all right? They're hedging in sub-second. They don't take risk, right? You're the one who's going to take risk. All you have to do is look at the volume in here and go, whoa, whoa, whoa. How could I ever get edge in there? You can't. You will not achieve an edge in these short duration options. You won't even achieve any edge even out here, 7 days out. You want to get edge as a retail client, you got to level the playing field. You got to come out 115 days. 115-day options, they're much slower moving animals. In the retail world, you're a slow moving animal. Okay. That's not necessarily a big deficit. Because you're a slow moving animal, you just have to know what you are. You're like a snail. Okay. And there's these things flying around you out there, and you want to avoid those when and where possible. Short duration options be the destruction of you. You got to go longer duration, get back and get hedged to keep reducing risk. And the bottom line is, look, I have inventory out here. When I say inventory, if I look at the S&P options on futures, okay, look, my inventory, 95, 94 days, 115 days. That's where my inventory is. Look over here, all right, 66 days, 87 days. I got inventory further out in time. Why is it so far out in time? Because it's what works. That's all that matters. Now, for those of you that want to learn to do this and you want to sell options, you have to understand there is a dark side. There's what we call the 90% probability and the 10% hammer. 90% sounds great. In fact, the trade that we showed you originally is much higher than a 90% probability. Okay, it's much higher than a 90% probability in here. In fact, I'm going to bring it up right now. I went out a moment ago and I just sold the 455s. I'll bring up what's called probability OTM. That's probability out of the money. Okay. The trade that I did has a 93% probability, okay, of expiring out of the money. Has a 93% probability of expiring out of the money. Okay. But here's the best part of it. We're not holding it the full 115 days. We want to look at what's called probability of touch. Okay, what's probability of touch? Probability of getting there. It's only a 12% chance the market can even get there. This trade, though, inherently has, if I only hold it for about 30 days, the trade has over a 97% probability of being able to make 50% or more. I'm going to say that again. This trade has over a 97% probability of being able to make 50% or more. Okay, and it's pretty rough, like, going through the math of there, but what I wanted to, impart upon you is that 90% probability is great. Okay, but 10% of the time, the market's just going to rip your face right off. And that's what you need to be concerned about on this stuff, right? Like, you need to be concerned about, it's not when things go right. And I know everybody's like, oh, what does it matter, man? I'm going to be right 97% of the time. Okay, you got to worry for the train wreck. Okay, and I'm going to teach you guys something that, and please take this to heart because it matters to me. Like, going out there and talking about trade alerts and stuff, it's important. But one of the things that really matters to me, I know what people do. Like, you have to understand, in this business, I've seen everything. Okay, I ran education of thinkorswim, then I ran education of TD Ameritrade. When I was at TD Ameritrade, I left in 2015. I exited after a 5-year lockup clause. Okay, we were running education for 7 million clients. No one has, has seen that much order flow. And one of the things that you see, it's just devastating. People go out and they do trades called like iron condors. How many people have ever done iron condors? Okay, where you go out and you sell a call, then you turn around and buy a call, and then you sell a put and you turn around and buy a put. This is the trade right here, wipes everybody out. Okay, this wipes everybody out because what they do is they sell a call, buy a call. Why? Because it's hedged. Then they sell a put, buy a put. So what happens is if you land anywhere in here, which is a big range, right? If this is the spiders and this is a $400 product, we could probably go up to 430, okay? Or in this case, down to 370. And anywhere in that range, you're like, oh, I'm profitable. And the first time you ever go out and trade it, okay? You trade in the spider, you do one contract, you go captain one lot. The trade has a 90% probability of making money and you make money. The very next time you do the trade, you do it in the spiders, okay? And you do it 5 contracts and you make money. Of course, you're going to make money. The trade has a 90% probability. Then the next time you do it, you're going to do it in a product called the SPX and you do one contract and guess what? You make money. And the fourth time you do the trade, you go into a product called the SPX. Instead of doing one contract, you do 10 contracts. Come on, has anybody ever done this before? Okay. Anybody? Have you ever done 10 contracts before? Ooh, yes, you have 10 contracts in the SPX. By the way, the SPX is a very smart product. It waits for you to do 10 contracts. 10 contracts in the SPX is the same as 100 contracts in the spiders. And it goes, come on, come, waits for the 10 lot. And it goes, we got one. And then absolutely does what? Annihilates you. Okay, it annihilates you. That's how people get ripped apart in this business. All right. When you trade high probability strategies and you're wrong, you get hammered. And the market's just evil enough to allow you to make money 3, 4 times. I've actually had people come here and they go, I haven't lost money in 18 months. I go, yeah, but you're going to get wiped out. And they go, that's not very nice. They always come back. They always get wiped out. Train wreck. Your losses are going to exceed the gains. It's going to knock down 50% of your account. Listen, and I say this in the nicest possible way. The buck stops here. I've seen everything. I've heard everything. Okay. This is how people roll. They get into trades like this. They don't fully understand. There's no edge in this trade. There's no edge in the idea of an iron condor. It's ridiculous. You go, I make money. I get hammered by a train. Okay. And people go like, wow, man, it's like you could see my account. I could see your account. Like I used to go into people's accounts. We'd study them all different ways, shapes, or forms. And then I'm going to tell you your exact thought process. Here's your exact thought process. You go and you learn this trade called the iron condor, right? Like you've actually learned the strategy and you made money, and you get completely wiped out. You're like, but it was working, man. And then you actually go to another class and they go, we can teach you to fix it. Fix is a really dirty word. You got to forget that crap. 15 years in the brokerage world, you're going to be a total cynic about this. Anytime you're fixing a trade, it means more transaction costs. Well, transaction costs are free. Well, guess what? It's more risk. What's the first thing you learn in this business? Do not add more risk to an already losing trade. You go, it's not a loser. It's a trade that I've morphed. Okay. So what you morphing, I love that term too, morphing. That's what I call an amalgamation of crap. Yes. Okay. Be literal with yourself. Fixing is an amalgamation of crap. You take a car and drive it off a cliff and bring it to a body shop. They're going to tell you, that's a nice piece of crap. I'm going to tell you the exact same thing. Fixing a trade throws more good capital after bad capital. You let it go. You have to learn how to do this correctly. What we are going to teach you, all right, right now, just in concept, okay, just in concept. The most important thing you want to understand here is that you, as a trader, okay, shouldn't call yourself a trader. You are an inventory manager. All right. What does an inventory manager mean? It means you need to manage inventory. If you were going to like sell stuff on Amazon, what would you do? You find a product, you sell it on Amazon. I'm looking for like a product over here. Okay. Here, perfect. Fidget spinners. That is a fidget spinner. Okay. Well, that was weird. You couldn't even see it. Look at that. It like disappears. There's a fidget spinner in my hand. Disappears. Fidget spinner. Okay, that is a cool magic trick. Here's a fidget spinner. It's gone. I'm easily amused. This is a fidget spinner. I have them because I'm a well-caffeinated individual. But if you had a fidget spinner, every time you sell one of these fidget spinners, okay, you basically make 50% on it. Every single time you sell one, you make 50%. Then what's the name of the game? And I'm dead serious about this. If every time you sell a little fidget spinner, you make 50%. Let's say you buy them for $1, you sell them for $2. Good. Okay, it's great. Right? It's more than that, but whatever. Okay. I don't care if you sell them for $1, you're making them for 50 cents. What's the name of the game if you are making 50% on fidget spinners? Okay, you tell me. If you're going to be an inventory manager, what's the name of the game on those fidget spinners? Okay, Volume. Trade as many as you possibly can. I know that that eludes some people, but it's serious. Like if here is the spiders trading at 400, okay? You want to go out there and you want to sell some 455s. You want to sell, okay? Some 465s. I mean, hell, you want to sell, all right? Some 470s. Inventory, okay? Inventory. You want to come out here also. What's out here? This is the put side of it. Maybe you want to sell some 320s. You want to sell some 310s, okay? You even want to sell 300 puts, okay? You want to sell everything you possibly can. What am I doing? Splatting inventory. I got inventory now working on both sides of the marketplace. So every one of these pieces of inventory is an opportunity to make money. Who cares about the 320, 310? By the way, the calls, collect $1, collect $1, collect $1. The puts, collect $2, collect $2, collect $2. What's wrong with this picture? I'm going to tell you exactly what's wrong with this picture, okay? This is your inventory, okay? The whole goal is to churn through as many fidget spinners as you possibly can. Fidget spinner is the key over here. What's the fidget spinner? Churn, okay? You want to basically sell a fidget spinner, do another one, do another one, do another one, do another one. But, okay, if you're going to have one fidget spinner, why not sell 5? If you're going to have 5 fidget spinners, why not sell 15? Why not? There's no reason you shouldn't, okay? It's the limit of your ability in terms of your account and your knowledge of risk management. Because you have to understand, okay, all of a sudden, fidget spinners may have heavy volatility in fidget spinner. Okay, what does that basically mean for the market? One day you're going to wake up and that market's not going to be at 400. That market could be down here. The market actually challenges you. What happens? Okay, your fidget spinners, boom, boom, they blow up. And this is what happens to people. They get absolutely ripped apart in one big, okay, adverse move. Like the markets just get a little, wild. The market goes awry. And people get ripped apart, and you go, well, but I could have been somebody because you made money for 18 months and they got ripped apart. Okay, here's the thing: if you're going to be in the inventory management business, in this business, if you're going to be an inventory manager, you have to actually come in with some type of risk reduction metric. Okay, like if you were in an Amazon business and you were selling fidget spinners, you probably have to actually carry insurance, a couple of employees. Okay, do a little dance, make a little love, get down tonight. You got to open up LLCs. All that crap to be in the fidget spinner business. In this business, in the inventory management business and options, you don't have to do any of that. But I'm going to tell you right now, unequivocally, you need to learn to hedge. You have to hedge. What is hedge? Hedge is like going out there and buying an insurance policy. It is, okay? By the way, FINRA and the SEC hate when I use those terminologies in insurance policy, okay? How about this? Hey, FINRA and the SEC, okay? We're teaching people to mitigate risk because one day you're going to wake up and all hell is going to break loose. Think of a hedge as a sacrificial lamb. Let's say that hedging is going to cost me, okay, a few percent every single month, but it's a sacrificial lamb. Listen, most of the time I live on an island. Okay, I know it's weird to say, but there's an island a few hundred miles away from me that has a volcano on it. And I always think of like this analogy of somebody taking a sheep, you buy a sheep or the lamb, you throw the sacrificial lamb into the volcano. Why? Well, we wouldn't want to anger the volcano. So every month you have to go walk up into the volcano and throw the lamb into the volcano. No lambs were hurt in the making of TheoTrade. But it's the same thing here, okay? I cannot operate as a trader without hedging. I can't operate as a trader. And I'm going to tell you, there's a lot of people out there be like, no, man, you don't need to hedge. When things go against you, you could do this or this. Let me tell you firsthand, buck stops here. I don't give a crap what you say. You're going to wake up one day, the market's going to be on fire. Something happens geopolitically, you're done. Done. It doesn't matter. Stocks, options, you get killed. Hedgers survive. Okay. Hedgers are like the people that you sometimes laugh at that actually have some supplies on the side and then COVID hits. Okay. And they already have like, mounds of toilet paper. I don't know what it is about the toilet paper thing, but anyway, okay. Hedge now. So I also live on an island and we lose power all the time. I have 120 gallons of diesel fuel just in case. Got to run the generator. Okay. To me, hedging is the most natural thing available. All right. Enter the hedges. Enter the hedges. Now, there are three primary hedges that I use. And I actually want to cover the ones that I'm really going to use like implicitly here, but I'm going to show you what they are. The first one, okay, by the way, as I said, there's three of them, all right? The first one is actually what we term a risk, okay, twist spread. The second one is a VIX vol spread, and the third one is termed a gamma iron. Those are your hedges. Now, to make this so much easier, you go, oh yeah, I got to learn hedges. I got to learn risk twist. I got to learn this. I got to learn this. Forget all of it. Okay. What is the VIX? The VIX is the S&P 500 volatility index. All right. Okay. I want you to think about something. The market, if the market goes down, where's the VIX go? Boom, up. Okay. So if I put on a VIX vol spread, very little trade right in here, I'm actually going to layer it right in here. Okay. Right there lives a VIX vol spread. Now, why is it there? That's an insurance policy. Okay. That's an insurance policy. This little peanut sits out there. By the way, that little peanut did cost me a couple of bucks. How much did it cost me? Okay. You guys wanted to get into brass tacks? Like, how much does it actually cost you? Because I told you, anything I do, okay, is real. I have 6 VIX spreads on right now. I have 6 VIX spreads on right now. What did I pay for them? Let's go. Let's go into my account statement. Let's see what I paid for them. Okay. Now, I have some bigger positions on, and I don't mind that's more than 7 days back. That VIX spread, though, is going to live a long time. Okay. Here we go. I paid 82 cents for 6 lot of VIX spreads. Okay, 82 cents, 82 cents, 82 cents. But obviously, some of these have some contract size. So I paid 82 cents for VIX spreads. Okay, what are my VIX spreads going to do? Listen, my VIX spreads are there for one reason. We go down and down big. The VIX spreads go ba-boom. They explode in value. Why do they explode in value? Because I'm going to tell you right now, if the proverbial crap hits the fan, my VIX spreads are actually going to mitigate my downside exposure. Because right now, here's the SPY. And the SPY is trading at 400. And I am going to go out and I'm going to sell 455, which I already did. And I am going to sell, okay, a 460. And I am going to sell, okay, maybe a 470. And each one of these collect a dollar, collect a dollar, collect a dollar. Simultaneously, I am going to go out and I am going to sell a 340 put. I'm definitely going to be selling, okay, a 330 put. I might even be selling a 320 put, collecting $2, collect $2, collect $2. Okay. There's huge premium there. But I'm a realist. Like, I'm going to just tell you right now, you're going to wake up one day, and this marketplace is going to be on fire. And if it's on fire and it comes down hard, all of a sudden this little trade, boom, explodes in value. By it exploding in value, changes my entire risk curve. Instead of getting absolutely killed in here, like a little parachute, and goes, okay, you got all the time in the world to get out now. Okay, it's going to save you. It's going to save you for 82 cents for 56 days. By the way, my hedge was 65 days when I put it on. For 65 days to pay 82 cents for a hedge, it's worth it. It's a slam dunk. It's absolutely slam dunk for that. Okay, why wouldn't I hedge? Meanwhile, what do you do on the upside? The upside, we have a strategy called the gamma iron. If the market explodes higher, you have to actually pass through the upside hedge before taking the hit on these. This, people, this is what premium selling is about. And I know it seems like a lot of crap is going on the screen. Look, what am I really doing? I'm selling inventory, trying to make 50% on my fidget spinners. The only way I can do it, though, the only way I can handle the business is to have hedges, okay? Because without them, I die. I die trying. I have 6 hedges on because I'm selling premium in a number of different products. I don't mind saying, okay, I got a lot of premium on right now. Okay, I'm selling stuff in the S&P futures. I'm selling stuff in the spiders. I got more inventory down here. Okay, collecting a few $100s a day of just doing nothing. But it all starts here, inventory management. Okay, inventory management. And I'm telling you right now, you look at this and you're like, that could be kind of complicated. It could be as easy as you get a trade alert. I tell you what to sell. You get a trade alert. I tell you what to hedge. Done. That's it. But you just have to understand where you're trying to go with this. Where am I trying to go? I'm trying to collect options premium without substantiating undue risk, okay? And to do that, again, this is why you want to sell premium. You can now sell premium in incredibly small accounts, $2,000 accounts, $5,000 accounts. Anybody want to learn how to do that? Okay. If you have a $50,000 account, $50,000 account could be construed as a very large account today. I'm serious about that. Margin is no longer an issue. Day trading rules are no longer an issue. How many people here want to actually learn to do this in a small account? Anybody? I have a better one. How many of you want to learn to do this in a retirement account? Because immediately people balk at the idea, I can't do it in my retirement account. Of course you can do it in your retirement account. Let me just show you something, okay? This is my retirement account. Look, just kicking off the year. This is a SEP IRA. SEP IRA. This is a portfolio margin up here, but the other one's a SEP IRA. So don't ever tell me I can't. There's no can't. I'll tell you exactly what you can do and exactly what you can't do. It's just a matter of, your understanding of what the trade alerts happen to be. Instead of trading spider options, okay, you can use this little guy. This is called the micros. The micro is an option on a futures contract. Trades exactly the same as the spiders. By the way, if you're looking at this and you're like, there's only a couple of expirations, okay, they're going to add daily expirations. Daily expirations come in February on this product, right? It's a brand new cutting edge product. Most people don't even know it exists, okay? They've also got one specifically for the MNQ, which is the Nasdaq micro, also in its infancy. If you want to sell options in here, I just want to show you MES. You want to sell options in here and you want to do it in your IRA, you want to go like 87 days out. I'll just give you, for argument's sake, right? How much margin would this tie up? Now, again, this is my IRA, and I'm going to go out here and just show you. I hit review and send. This will only tie up, the buying power in here, $43, because I've already sold some stuff in here. So the buying power is basically negligible in my account. In a regular margin account, that trade would tie up $600 of margin. There's no excuse anymore. Like, anybody can do this. It's one of the reasons we've been talking about it now. And in April, it'll be 3 years. In April, it'll be 3 years that we're starting to talk about Ultima. And we have over 6,000 people here at TheoTrade that are now trading these particular strategies. Okay, so you can sell this in a small account, produces positive decay. You can enhance existing positions. Okay, provides an incredibly high probability of success. You never need to buy or sell the stock. And one thing we haven't even talked about today, you could be wrong in market direction and still produce profitable trades. It's one of the reasons you need this in your life. Okay, now you can do this to bring in consistent returns, and we've got trade alerts. Okay, and in a minute, we're actually going to talk about criteria. But before I even talk about criteria, when I say criteria, it's the nuts and bolts of how to do this, right? Before that, even more important, okay, here's live trading examples. Listen, variations of all the following trades can now be done with as little as $2,000 in a funded brokerage account, and can be done inside of retirement accounts. So I stressed you. By the way, I love what somebody actually asked. Said, if you're selling something for $1, I want to address this right now. Selling premium for $1, okay, and looking for a 50, not a 50-cent gain, but a 50% gain, but your hedge costs 82 cents. How does that sum out? It doesn't sum out that way. You only need very, very small amounts of hedge for very large amounts of premium. Okay, that's the actual key to the entire strategy. So one of the reasons that people come to TheoTrade is, how much hedge do I need? It's never a 1-to-1 ratio. Okay, you don't pay 82 cents for something you're collecting 50 cents on. You only need a very small amount of hedge. Hedge, okay, is just like it sounds, like the hedges in front of your house. You just scrape off the top layer over there. The hedge is incrementally minute versus how much premium you can actually sell. Okay, it's like, if you went out there and you bought a car for $50,000, would you want to pay $20,000 a year for insurance? Of course not. It's ridiculous to even think that, but there's still going to be a cost associated with the insurance, but you need the insurance or you can't drive the car. So bottom line is, you need to learn how to hedge or you can't do this. Anybody that does this without a hedge, okay, it's just a time bomb. You're an absolute time bomb. People ask me, when do I hedge? What do you mean, when do I hedge? Always. Of course, you're always going to have a hedge on. It would make no sense not to have a hedge on. We think I can actually predict the next, fat tail that comes. Okay. Be real with yourself. I've been in this business now since the late 90s and I grew up around the business. The one thing I've learned in the business is you don't know anything. Okay. Let's get it out in the open. You don't know anything. The longer I've been in this business, the more I realize you wake up and you're like, man, I didn't see that one coming. I mean, again, it's chaos out there. And to say anything otherwise is, I think you're diluting yourself. With that, $2,000 inside of a funded brokerage account. And as such, I'm actually going to show you what trade alerts look like. So I'm going to show you, okay, trade alerts, but then I'm actually going to take you literally into TheoTrade. And I say, this is TheoTrade. So this is actually the site. This is actually a live chat room that's in there. Okay, love this slide. So there's trading going on obviously right now, but what I will actually show you in a moment is our portfolios. So you have access to, well, all the different portfolios and an Ultima TheoTheta portfolio. When you click on an Ultima TheoTheta portfolio, I apologize, I'm logged out, okay? When I click on a portfolio, what am I actually clicking on, all right? You get to see all of our trades, all right? You get to see all the trades. Let me log back in. I'm gonna log in and make sure that we're good to go, okay? Okay to go, okay to go. Here we go. So I'm just logging back into the site. So when I actually take you through these trades, okay, I want you to see where they're coming from. So under the under my portfolios here, I'm actually going to go to Ultima TheoTheta. What a portfolio happens to be, you can see all of our open trades, okay, and then of course all the closed trades. Everything that I do to open to open to open to open to close to close to close to close, okay, we have every single trade that I've done for over 2 years just on here. And we don't, by the way, we don't delete stuff. You can see everything we've done from open to close. Your returns are going to be largely predicated on how much capital you're allocating. I always go for a one lot almost in everything, unless I'm doing like a ratio where you'll see like a 2-1 ratio in here. And that's all fair game. But for the most part, you get to see everything we do. This happens to just be those trades, okay, cut and pasted in here. So this trade on Tesla, you can see the opening day. Here, I'll just show you. Opening, okay, that's the open. Come on, thing, okay. That's the open, this is the close. Tesla, 58% return, the exact strike, okay, everything. I'm just gonna scroll through here very, very briefly because I want you to see the history, okay? And I also want you to see what I trade, all right? Almost every single return in here is right around 50%. That's obviously what I'm shooting for, okay? And I know I'm back in 2021 and sometimes you do take a loss. I have no problem showing you that. Don't think that the, it's not infallible. I have hedges on, but sometimes trades will take a couple losses here and there. Okay. But almost everything you're going to see since 2021 into 2022, almost every single trade is a gain. Now, as I'm scrolling through here, and I know I'm flying through different trades, you notice everything's pretty much IWM bonds, QQQ, spiders. Once you actually get your feet underneath you and you know what you're doing, you can then move into the ES. The ES is exactly 5 times the size of the spiders. The margin in the ES is minimal margin. If you trade in options, futures contracts, okay, very minimal margin. Then once you know what you're doing, you can amplify this a little bit more, okay, by actually going into things like Christmas tree spreads. This is actually a little bit more of an advanced trade, but has some really big upside potential in it. Okay, so I'm just scrolling through, showing you every trade that I've done in 2021. By the way, this is literally every single trade I did in the TheoTheta portfolio in 2021. Now I'm into 2022. Okay, by the way, after 18 months, I stopped cutting and pasting the trades. By the way, all these trades were done in thinkorswim, but after this, I stopped cutting and pasting the trades, and I just figured, hey, if you want to see the rest of it, you can go into the website now and you can actually look at literally. It's every single trade I've done, right? So this is obviously the 2022 track record. I can even go back, right, as far as you want. That's actually where I left off in here, okay? This is all the trades that I've actually done. Close, 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 to open, to open, to open, to close, to close, to close. And you can see opening and close trades, everything is listed in here, okay? But that's only one portfolio. And I'm going to tell you right now, this is the larger of the portfolios. In addition to it, we also have what we call TheoTheta small portfolio. What's the small portfolio? An account as small as $2,000. We play to the lowest common denominator in here. This is the small portfolio. This, you can literally have $2,000 in your account, you can still execute. So we actually manage a large portfolio and we manage then a smaller portfolio. Every single trade, okay, is representative of my actual execution, okay? I execute the trade, it goes out on text message. I execute a trade, it goes out over push notification. Push notification is actually sent through a mobile. You can't even see my phone. That's weird. It's through a mobile application. So I don't think put the wife's picture on there. Okay, I'm gonna get in trouble. Anyway, I'll show you my trades, not the wife. Okay, she'll let me show the trades, not the wife. But everything here is no holds barred. Every hedge that I do, okay, every good trade, every bad trade, it's totally no holds barred. And if you don't have a huge amount of time, it's not a problem. The one thing I want to show you is every trade shown today was done live at TheoTrade. Results, they're perfect for part-timers. So we are going to use trade alerts. What better time? I get that maybe you don't have time to learn a new skill set. Like, I get that. Not everybody has time to learn a new skill set. What you have got to understand, though, here is big, broad strokes of logic. You got to understand that what we're doing. We're trying just to help people to sell some premium, to get back, to reduce risk and make some money. But you can follow our real-time trade alerts. And we're leaning heavier and heavier into trade alerts. Selling premiums, a wonderful hedge also for recessionary times. In recessionary times, people typically suffer in their portfolio. Our clients didn't suffer last year. It's the best year we've had since 2008. Okay, markets could be in bouts of volatility for years to come. People are going to be freaking out looking at their computer screens. Get a couple of trade alerts, execute. And by the way, your trade alerts come to your mobile device. You can execute the trades over the mobile device. There's just no reason not to do it. Again, how our members are doing year to date. Scored 300% on one of these flies today. TheoTrade is bar none the best educational platforms in trading I've come across in a long time. Keep up the good work. Thomas said up 80K since January 1st, 2022. Okay. Again, guys are great. Characteristics of selling Ultima premium. The attributes of it are undeniable. You never have to buy or sell the stock, right? Risk is limited to precisely your comfort level. Okay. By the way, somebody said, do the alerts include the hedges? Oh, of course. The hedges are most critical. Like this alert right here in Tastyworks, that's the hedge. Okay. This is the trade. This is actually a hedge that's been on a while. This has actually had a number of other trades. And I say to you, I will show you everything. This is the last like 30 days. Okay. We went out, right here. Okay. This is a hedge. I'll actually show you. That's a hedge. This is the premium sold. Okay. I bought back the premium, sold more premium, bought back premium. So this one hedge has already sustained us through multiple cycles of premium selling. That's why I was going to say, like, you don't just go out and like pay 80 cents to collect 50 cents. That wouldn't work, right? So there's multiple premium sales you can do with one hedge. Risk is limited to precisely your comfort level. You never need to use a stop order, varied time frames, probability of profitability is high. It's a perfect strategy to enhance your portfolio, but you can do this with any account size. And again, it's all designed, okay, to bring in consistent monthly returns. It's designed to be able to build up an account. Building a portfolio of options. I don't want people to be intimidated by the options portion of this, right? So you can do this, minimal credits, minimal risk, but learning to sell options premium, it's like bringing a power saw into a job site. If you had a bunch of people with like, hand tools and all of a sudden you brought like this giant power saw, they'd be like, oh, that is awesome. Okay. Options are the exact same thing. Options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. But if you don't use those options correctly, you'll lop off a couple of fingers. And you need to understand that, like selling premium, okay, you don't necessarily have to understand options. Don't let, again, the options portion of it intimidate you. The first thing you need to understand, you're going to need strategies, okay, for the foreseeable market future, just period. Like, I don't want to sit here and preach to people, this is the only strategy, okay? There are several variations of this particular strategy, depending upon your level of engagement, depending upon your level of capital. And we have portfolios for them all. We have a small portfolio. We have a large portfolio. We have a portfolio, okay, designed for people that just want to take longer duration trades. But we can show you how and when to sell premium in a matter of a few hours. What we do here is we create recipes, all right, to be able to enter and, of course, exit the trade. But more importantly, and you can go through every class that we have here at TheoTrade about this, I want you to go through the class. I do. But realize the trade alerts are there, that the trade alerts are there to actually be kind of the saving grace. This is what you need to know to successfully sell Ultima Premium for a living. Okay, what underlying stocks or indices make the best Ultima Premium selling candidates? You saw that. Bonds, S&Ps, okay, QQQ. What volatility should I seek out? You got to know the right volatility. Too much volatility, it's a nightmare. You know, too often, people that go and sell options in really, really high volatility, they don't know that they're walking into a minefield. Okay, what options expiration do I select? Okay, what should be the delta of the option that I sell? The delta of the option you sell, what does that even mean? What should be the options I buy against the position? Okay, all right, so you sold some options, you need to learn, what options do I buy against the position? How do I build the position? Like when I say, how do I build a position? That's when I'm starting to reference the idea of building a position. Okay, you come in here, sell some of this, sell some of this. How much hedge do you need? How do you build the position? You need to know how many VIX spreads so you don't pay 82 cents for a trade that makes 50 cents. Okay, you got to understand that. Like, how do you actually build the position? Do we need a large amount of capital to do this? Absolutely not. What's the right amount of risk for me? We'll dial that in. Okay, we have an entire subsection in this of how much do you do for your account size? What are the right percentages supposed to be? Well, 50%. But what about those hedges? Okay, how do I protect from market crashes? Well, that's where the hedging comes in. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Trading is always about answering the what ifs. What might be a good candidate, a stock or ETF, the correct options expiration cycle. Just want to bring this up, but have you guys looked at an option chain recently? Okay, have you looked at an option chain? Let's bring up the SPX, the mother of all products. Look how many expirations are in here. It's absolutely insane. 114 day, 115 day, 94 day, 87 day. I don't know which one to do. Okay. How much capital do you commit to generating premium? Like if you said, Don, I have a $20,000 account. How much of the $20,000 account, okay, should I use for this? This is why. Okay, you need to pay attention. Like, look, we can send you trade alerts. We will send you trade alerts. And we'll give you every detail of every trade. But I urge you, you still have to actually watch the class in here. And I say that because you want to learn to position size properly. I know everybody today. What do you want? Instant coffee and instant tea. Like you want it now. Okay, this is a world of want it now, want to make money now. You can't. Okay, watch these classes. Just watch the class, okay? Because the class is going to tell you how to position size properly. What options do I sell? What options do I buy? How can I limit my risk? We have those answers. We build recipes with definitive criteria, checklists for each unique strategy and each unique variable you're going to encounter, right? Okay. TheoTrade is the answer to those questions. But I got to stress to you, when you're going through a checklist, this is a checklist just like a pilot would have before taking off. Step one, what do you think a pilot does? Hop in the cockpit, boom, throttle up, let's go. Okay, they go through a highly detailed checklist. And more importantly, after they go through that checklist, when they're in flight, okay, and something happens, they're like, whoa, what do we do? Like, think about what can happen to you when you're trading. What can happen to you? Dividend risk is coming. Expiration is coming. Okay. There's dividend risk and expiration because it's a triple witching. And oh my, what if? And you start thinking about all the what ifs. And all of a sudden we have those answers. What's the right probability? How many option contracts? When do I close the premium sell? What do we sell off big? Do I bail out of a trade? What if the stock rallies massively? Can I fix a losing position? It's how, it's when, it's why, it's at what price. And I'm telling you right now, that is just the beginning of the variables that you're going to face while selling Ultima options for a living. Listen, you can read what selling premium is all about. You can read about Ultima Premium, okay? You might even know how to build a few trades. As I said earlier, okay, some people will actually, they'll right now, they're Googling like sell options premium, Google, okay? And Google comes up with what? I don't know, Google probably comes up with 10,000 pages about selling premium. How many of those pages are going to have definitive criteria? Step one, to select a candidate. Step two, here's the volatility. Step three, what's the liquidity? Step four, selecting an expiration cycle. Step five, for any of that, you have to learn how to hedge, how much capital. Step six, we will literally walk you through verbatim exactly how to get into the strategy, okay? What to do when you're on. If we rally, if we sell off big, what are you going to do, okay? How many hedges do you have on at the time of a crash, okay? It gives you those variables. It covers all the different angles in here. What you are here at TheoTrade for, okay, is the recipe for success. You need the recipe for success. It's 20 plus years trading experience. That's just me. We had access to client order flow and viewed and studied millions of trading accounts. I mean, I ran education for thinkorswim and TD Ameritrade for 15 years. The largest option order flow in the industry, okay, is what we got to see to derive these particular strategies. Criteria is your recipe for success. We spent years fine-tuning the trade setup, okay? When you approach the section on criteria, you follow the steps to be able to build a trade, okay? This is the Ultima income generator course. And before I go any further, I'm going to tell you right now, we here at TheoTrade, we do not sell a la carte classes. It's not what we're about. Yes, we have a class. Yes, I want you to watch a class. Trade alerts for 3 months. It's new. We are now giving you more access to more trade alerts than we have ever done in the history of TheoTrade. We have finally come to the conclusion, yes, people want to learn this. But more importantly, in kind of a tumultuous time, in a volatile time in the marketplace, they want to follow trade alerts. I happen to be the trade instructor for the Ultima Income Generator course. It's a 5-hour course. It's archived. It's ready to go. The class slide deck that includes all the entry and exit criteria, you can download it, okay, right now. You can just download the slide deck and look through it. You can start watching the class today. It's not $500, okay? And I want to be very clear about what we really do offer, and I want to be clear about it right now. Look, okay, I've been around this industry, okay, retail traders like yourselves, since 2001. So I was in the professional world from 98 to about 2001. 2001, I went to work for thinkorswim. I've seen everything. I've seen every educational venue out there. I've seen education that costs, anywhere from a few $1,000s up to, $25,000 for an 18-month course. I've seen it all, okay? I'm going to tell you without unequivocation, what we offer here at TheoTrade, everything else pales in comparison. And I'll tell you right now, people, they'll sign up for TheoTrade, okay? We don't even have a membership anymore. You just sign up for 3 months, okay? If you don't like it, you get your money back at any point in time. I'm going to show you that in a moment. Everybody that's ever signed up, what they basically do, they check it out. Even if they don't like it, okay? We want you to part ways on a good terms. And you find out, though, everybody comes back here. Because I'm going to tell you right now, there's nothing else at any other educational venue at any cost that you're going to be able to pay for. People are like, oh, I got one-on-one support and so forth. Why? Okay, why? We have it all here for you. Okay, we are the one-stop, okay, for everything you're going to need in terms of financial education. Okay, we even have a professor of finance that's actually on staff that works at DePaul on the side, moonlights at DePaul. Okay, works here at TheoTrade. I've worked with him for years. It's Jeff Bierman, who actually built the thinkorswim charts. The man has forgotten more about technical analysis than most of us will ever know. Let me show you what we do here. And I want to be very, very clear about this, okay? Because as I said, I've been to other classes and I know what goes on out there. People spend $500 for a class, then they have to spend $500 for an indicator for the class. Before you know it, that's obsolete. They got to pay $500 for a class, $500 indicator for a class is obsolete. Forget all that, okay? What we do here at TheoTrade, I'm going to show you this. I'm going to walk you through it. Okay. It's $297. Okay. $297. What is that for? Okay. 3 months. What does it include? Everything that we do. Okay. Does it give you the Ultima course? Absolutely. Does it give you the trade alerts? Absolutely. Does it give you email access to the instructors? Yeah, absolutely. Okay. Does it give you a live, okay, trading room? It does. I'm going to go through all this. I know it's hard to read over here. So give you a live trading room? It does. You can actually watch us trade live throughout the course of the day. Probably the most important thing, though, is to know, okay, on here, it also gives you access to every class that we've done since inception. We launched TheoTrade in 2016. Every archive from 2016 to present day is available to you. You can watch any of it. It's all searchable, okay? We give you everything you're going to need. We don't charge more for indicators, okay? I put a huge amount of weight. Look, email access to the instructors, not to just some monkey. Email access directly to me, email access to Matt Williamson, email access to Brandon Chapman, email access to Jeff Bierman. Okay, why wouldn't you want to access them? You would. Okay, email them. That alone is worth $300. It is. It's 300 bucks for 3 months. Okay. It doesn't cost more for the live trading room. It doesn't cost more for the email access. It doesn't cost more for the live trading alerts. We will also give you, when I say mobile access, we have our own mobile app on here. Okay. We literally have our own mobile app. I know that's really weird. It's like cutting out in the green screen. Okay. Let's see if I can get behind it. It doesn't like me. Anyway, we have our own mobile app, and the mobile app has the archives on it. Why would you want that? Okay. Look, it's $297 for 3 months. One of the things that I implore you to understand, this is not an introductory price. After 3 months, what do you want to do? It's another 300 bucks. And it's not a membership. We don't do any of that. Okay. So understand, today it's $300 for 3 months. You can even break it up into different payments. Okay. This is the Ultimate Income Generator course, how to build a portfolio of high probability trades. Okay. That generates monthly returns regardless of your starting capital, detailed and entry exit criteria, discover option Greeks. Okay. Learn how to use a risk array, learn how to properly allocate in a way that reduces risk, discover risk mitigation techniques, how to sell premium in accounts. In addition to this, we'll even give you the inflection point spread class. It's also part of it. It's a 3-hour course. Slide deck's also included. Inflection point, okay, is a variation of Ultima. It's kind of what I'm using right now. Learn how to like sell premium and hedge in one transaction. So you don't even have to use the VIX anymore. We're beyond that, where we actually say, here's the trade, and you can put it on all as one transaction. Create high probability positions that return, monthly returns regardless of account size. You're going to learn how to hedge, okay, even in the most extreme environments, okay, how to analyze it and the criteria for inflection point spreads, okay. Everything that we do here today, and this is also critically important, as I said to you, it's $297. And I put it up here again because people get lost in the weeds over here, but it's $297, okay, for 90 days. And there's a full money back guarantee. So I just wanted to throw out to you $297. There's a full money back guarantee, and there's no stipulations. At any point in the next 90 days, if you're not satisfied, if you don't like the trade alerts that we're sending out, just get back your $297. Listen, one thing that I always urge people to understand, we want people here that want to be here, period. Okay. If you find something better in the educational world, send me an email. Send me an email personally. I want to know about it because we'll add it to TheoTrade, right? There's no firm out there in the educational venue that has this level of instructors. Okay. Our instructors have a minimum of 15 years of experience. Most of us actually worked either on a trading floor. Many of us have worked inside the brokerage side of the business. Okay. We understand the retail trader better than anybody. Again, as I said, you could spend $50,000 in stock market education. It'll pale in comparison to what you'll have access to for $297. And I always tell people, like, sign up for it. Ask anybody in the chat rooms and so forth. They say the exact same thing. Look, there's a money back guarantee on it. Okay. Check us out. And I'm actually going to give you the web address right now. It's theotrade.com/SKU. Okay. It'll be really straightforward. Theotrade.com/SKU. And I'll throw it up here. By the way, SKU, S is in Sam, K is in kick, E is in echo, W. So it's theotrade.com/SKU. And if you scroll down there and click add to cart, make sure that pops up in here. As you click add to cart, make sure to put your phone number in. Your phone number will automatically enroll you for text messaging. If you are not in the United States, or if you cannot receive text messages, it's okay. We have push notification. You could do $297, $149 in 2 payments, or even 3 payments of $100. I just throw it out there because, again, we've made it accessible to everybody at every single level. Okay. And again, the money back guarantee in there is all discussed. Okay. It's 100% risk-free. Like literally, like it's completely risk-free. Again, go to theotrade.com/SKU, enroll now. Now, as you're enrolling, I'm going to tell you everything that's included inside of TheoTrade. Probably the biggest thing that we've really changed, and I would say very recently, and this is brand new, we're leaning very heavily towards, okay, alerts, alert. Okay, what's the alert? It's trades that are being popped out to you. And I'll actually show you that for all intents and purpose. Okay, the alert service is huge. So people coming here obviously to learn, there's a money back guarantee on it, but at the exact same time, the alert service is what is so critical. Of the next 90 days, I think you get an excellent feel for what that alert service happens to in fact include. Another one, how are we doing year to date? Okay. This year I did come in and what works and I did more of what works and less of what didn't. Thanks to your selling premium and IPS. IPS means inflection point hedges. Took 12 grand to over 32,000 in 18 months. I've been doing your method. Thanks so much. And look forward to new ideas in the coming year. This was actually late. It's not yesterday, but this was in late 2022. I just wanted to throw that out there. Here's every bonus that's included. We go beyond a class or indicator. TheoTrade is all encompassing. Like when you sign up for $297, this is everything you get. It's quick start beginner's guide. So quick start beginner's guide includes, like when I say a quick start beginner's guide, somebody in here is inevitably looking at this and saying, this might be a little over my head. We get you ramped up for it. Options 101, 201, not a problem. Okay. Number two, access to over 100 trading classes. What does that look like? Okay. We have classes that we've done here at TheoTrade. We've, impart upon you that we've been around since 2016. Before that, before 2016, most of us were still working at thinkorswim, TD Ameritrade. Okay. But if you take a quick glance, these are all the classes that we've offered. Now, when I say all the classes, option classes, technical analysis classes, day trading, click on option classes. How many classes are in here? Okay. Dozens and dozens and dozens. Every one of these is a 3 to 5 hour class. Okay. And I know people are like, oh, this is so overwhelming. Here's inflection point spreads. Here's Catapult. It's actually some of the newest. This is the newest class I've actually put together. Do you get access to Catapult? Of course you do. All right. Here's December 27th. Okay. Catapult class. Catapult. So the Catapult class will actually walk you through everything, both on thinkorswim, Tastyworks. We use them interchangeably. Catapult class, though, is the newest thing going. All the criteria is in here. So by all means, you get access to everything that we've done. Everything that we've done since we actually launched TheoTrade. So that's bonus number 2. Bonus number 3 is an access to our trading room. Here's our member chat room. Okay, right now, what time is it? Tony Rago's live. This is a futures trader. Maybe you're into it, maybe you're not. Okay, so if you kind of scroll through here, we're calling out trades. Okay, like literally we're calling out trades like in real time in here, and you can see the instructors. Okay, instructors are highlighted. So you get to see everything that we're doing in real time. When I say that this is live, okay, there's no if and or but about that. This is Tony Rago. He's live. He's trading Nasdaq futures right now in real time and micros. So you get access to the trading room broadcast for 6.5 hours a day. Okay, and we have 5 different trading portfolios. Here's the instructors, Jeff and Matt and Corey and Brandon and Slim and Tony and Blake. This is all of us working from home during COVID. You get access to all the indicators that we have. We don't charge you more for indicators. It's all included, okay? Then here's the trade alerts. This is probably the biggest differential, okay? We've not only started sending out trade alerts, and we started sending out trade alerts years ago, okay? But the Theo Theta portfolio, like this Ultima portfolio, has exploded in terms of size and magnitude. The portfolio is completely no holds barred trading approach. You get to see everything that I'm doing. When I execute a trade, you get to see the trade. We send it out on text message. We send it out to you. We make sure that you guys are comfortable with the trades. The reason we have the videos and so forth, so that you can follow along. Now, okay, everything on those trade alerts is included. Okay, hedges, everything. You get to see all opening trades, all closing trades. And if you can't like understand something, we do a weekly update video, okay, that will give you insight, my insight. Why did I do the trade at that particular time? So it's a 12-minute video that comes out every Friday, okay? And it'll instill in you, hey, why did we do it at a certain time? By the way, this is what the text messages look like, okay? I'll let you guys look at them for a second. This is a Theo Theta strategy, Ultima trade, Theo Theta small portfolio. Closing order. I was buying back the 4,500 calls. They were the March 31s for 440 debit, closing for a 50% profit. This other one, this was literally yesterday. I opened up an NVIDIA trade. An NVIDIA trade, slightly different spread, okay, for $1.20 debit. But I literally copied and pasted this from my, from my phone earlier. I want you to see what it looks like. That's it. That's an opening order. That's a closing order, okay? Bonus 5, technical analysis toolkit. All the technical analysis classes you could ever dream of and more. Bonus 6, day trading treasure chest. We include, okay, a total of 14 different day trading classes if you're so inclined. Bonus 7, mindset mastery. This class alone, seriously, 5 essential building blocks to successful trading. It's with Steve Miller. that class alone will change your entire view of the marketplace. This is worth a couple of $1,000s unto itself. I'm serious. Write it down. 5 essential building blocks to successful trading. Bonus number 8, quick start guide to Ultima trades. This is for people that know the business. This is for people that just say, hey, it's like, you open up a new printer, you want to learn how to use that printer like that. It's a quick start guide. It's just a quick PDF. It'll get you to be able to follow all the trades that I'm doing when I send out the alerts. What our members are saying, thank you. Okay, TheoTrade is the first educational trading service that actually making a profit with, and one which I can see a pathway to retirement. Okay, we include everything: classes, coaching, email access to the instructors, live trading room, live trades, obviously trade alerts, everything you're going to need to succeed. We literally built a Netflix for traders. Okay, it's $297 for 3 months. Again, it's $297 for 3 months. It includes everything on this screen. I'll even go over it again. The inflection point spreads, Ultima, but most important, obviously, some of the trade alerts for the next 3 months. And again, everybody's asking, I see people in here go, what happens after 3 months? After 3 months, if you like it, you just pay $297 again. We're not doing an introductory price. By the way, we do not auto renew. We wouldn't bill you again until you are comfortable. All right, so that's important. One aspect on this, I want to reiterate, TheoTrade is a completely riskless trade. There's a 90-day money-back guarantee. If you're not satisfied anytime in the next 90 days, email support@theotrade.com, receive a full refund. Okay, stipulations, there are none. Okay, you can get a refund for anything. Like, we understand, first of all, we understand this. Okay, the whole thing is only $297. That's it. It's $297. Okay, so we understand that portion. The other portion is we understand that life kind of gets in the way. Life gets in the way. Some people are like, I'm going to be gone this summer for a month, whatever. Okay. It doesn't matter. You don't have to call us. You don't have to do a little dance. You don't have to make a little love. Don't get down tonight. Just no excuses, no questions. Just send us an email, ask for your money back. It's $297. And if you do get a refund, you get to keep the bonus 1 on us, which is the options 101, 201. It's the introductory stuff. You get to view as many classes as you want. It's fine. Get into TheoTrade now. We'll answer your questions directly. Okay, here's the incentivized part. Okay, there are 30 spots today on the riskless deal, meaning that if you want this riskless offer, enroll today. Okay, and we do that. Why? To incentivize you to enroll today. It's $297. Okay, riskless offer is available with Ultimate Income, the alerts. Okay, obviously the inflection point spread class. It includes everything that you're going to need to succeed in this business. And again, after enrolling today, don't hesitate, email us. If you have trade related questions, email us. It's okay to email us. You can ask us anything you want. Here, close my entire portfolio with profits, 0 loss. This is actually not today. I do apologize. This one was actually last year when the market was tanking. Okay, my closed year-to-date profit from Ultima trades is paid for my yearly TheoTrade subscription. Look, this is everything you get today. Ultima, quick start, beginner's guide, trading classes, VIP membership to the chat room, okay, Theo Theta trade alerts. Listen, just getting started over here, right? Technical analysis toolkit, day trading treasure chest, the mindset mastery course with Steve Miller, okay, and of course the quick start guide to Ultima. Everything is in here. You cannot go wrong for $297. And I would hope that when you come to TheoTrade, you're a little overwhelmed, not underwhelmed. You're going to get some trade alerts and so forth. Watch a few of the classes. That's what they're there for. Okay. My first 4 trades following exactly the details in your Ultima class closed out. GTC orders sit right after getting into the trade. It's paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. Thanks, Jeremiah. Again, follow me over to theotrade.com/SKU. You can also follow me there for a link to the auto expected move indicator. Okay. If we pop over to here, I just wanted to see there are 30 riskless spots left. Okay, it's the Ultima Income Generator Alert Service. So yes, you get to view the classes. Okay, but we've shifted a lot of this though to the alert service. That is trades that are coming out to you. If you have questions, you can pop them into the webinar chat right now. I'm going to answer some general questions, then I'll get into some more specifics in here. As you guys are enrolling, okay, here, again, you just go right to this site, right? And it's, I'll reiterate once again, it's theotrade.com/S as in Sam, K as in kick, E as in echo, W, theotrade.com/SKU. I'll answer some of those questions as we're kind of going along over here. All you have to do, by the way, is click add to cart. Somebody just asked that one. So just obviously your information over here, whether you want to do single payment. By the way, none of that matters because there's still a money back guarantee, regardless of the payment type, still money back guarantee. We want people to feel comfortable. Like, and I reiterated this from earlier, and I'll say it again 5 more times. We want people that want to learn this business. We want people that want to be here. Okay, we want people that are going to execute some strategies. And people are asking different questions about brokerage houses and so forth. Yeah, no, we've definitely got some brokerage firms that we work with. Listen, if you really want to be in this business, you're not going to be at a Fidelity. They don't understand the trading side of the business. They don't want to be involved in the trading side of the business. So we're going to give you some recommendations of which firms that you should probably go to. If you're in Canada, there's some recommendations of which firms you should go to. If there's one thing that I know is what brokerage firms, what they want to do, what they want to accomplish, and where you need to be as a client. Okay. Wanted to drop you a quick email. I think the class is wonderful. I've been stretched each session, but not beyond my capability. After each session, I watch the recording and do the homework. I feel each week my knowledge of options trading is growing steadily and rapidly. Okay. This comes from Todd Summerall. This just basically alludes to the fact that you guys, listen, you can email us with real trade related questions. Real trade related questions. I'm going to tell you, okay, what I think. I'm going to tell you ways out of, nasty positions. I hope that at some point, everybody emails me. It's okay. It's okay. We have 6,000 members. We have more than enough staff and traders that can actually help answer those trade and trade related questions. So a couple of generalized questions, and we'll kind of answer some specific questions in here. Okay. With that, what do you need to get started? Nothing really. A laptop. You know what? Honestly, I don't think you even need a laptop anymore. Okay. I think that I really think that you could just use like a tablet. Just use like an iPad. You don't need a good iPad. Buy that $299 Walmart iPad. It's fine. Buy an Android device. It's fine. You need an internet connection. You need a brokerage platform. Okay. Number 2, this is not a membership. We don't auto renew. We don't bill you repetitively. I'm going to say that again. This is not a membership. This is not an introductory price. This is none of the above. Okay. We charge for 3 months, $297. And people today, the skeptics are like, it's too good to be true. Try it. It's $297. You have a money back guarantee. Try it. Because I'm going to tell you right now, yeah, we'll put our money where our mouth is. It's $297. I don't care. Okay. If you don't like it, we give you the money back. And I know some people will try it and they'll be like, on the 89th day, they're like, I'm getting my money back. I marked the calendar. Nobody ever leaves TheoTrade. Okay. Nobody ever leaves TheoTrade. Why would you ever leave? We give you everything you're going to need. Like, you can't call Charles Schwab anymore and be like, hey, what do you think of this? You have no one to talk to. Okay. We're that voice that you can actually talk to. You can email us. You can talk to us in the chat rooms. Okay. Ask us questions. That's what we're here for. We understand there's no one else out there to be able to talk to. All right. Number 3, we provide weekly updates of every move that we make. Okay. So you can follow all those moves, all the trades. Number 4, we archive everything. We understand you can't watch, every live trading session. Every word spoken here is archived. It was really cool. We give you access to TheoTrade Mobile. You can download the archives. You can even download an archive and play it back at 2 times. 2 times. Okay. By the way, somebody said, what are the full details of the money back guarantee? There's no details. If you do the payment plan, we still give you your money back. If you don't do the payment plan, we still give you your money back. Doesn't matter. There's no details. Okay. I promise you that. I know everybody wants details. Here, wait, where's the details on it? Okay. It's right on here. No excuses, no questions, no commentary. There's no stipulations. We don't care. We really don't care. I would never fight somebody ever for $297. This is not like a gym membership. How do you get out of the gym membership? You're like, I don't know, maybe I cut off an arm. Okay. You can never get out of a gym membership. That's why we don't even do memberships anymore. I implore you. You want to do it, you do it. And if you don't like it, like, I get it. Okay. As I say, we want people to want to be here. If you haven't noticed, I'm a little bit off beat too. If you don't like that, I get it. But we have other, individuals that are on every day, like a Jeff Bierman. Okay. Jeff is much more dry, let's say. Some people prefer Jeff Bierman, but he's a market technician. Anyway, we give you access to TheoTrade Mobile. You can actually watch stuff even when you're offline. Like, TheoTrade Mobile is really cool because you can download the videos and you can watch them at any time. Okay, at any time you want. All right. Number 6, add your cell phone number when enrolling. Receive, trade ideas via text message. You can also download for push notifications. This is critical. Okay, it's critical because we're doing a lot of alerts. Like the alert service is absolutely a big critical portion of this, right? So with that, number 7, you can email us anytime, receive a response within 24 hours, including trade-related questions. So gain access to everything that we've done. Previous, it's actually now, it's going to be 7 years, including classes, coaching. We have access to archives. I'll just show you really quick in here. Okay, so this is the TheoTrade site, option classes. Okay, but one of the cool things is you can come in here and you can go to member home. And under member home, there's a search function. Okay, you want to learn about skew, and every coaching session that's been about skew, hit search. Okay, this will actually search since 2016. So every single thing since 2016, all right? Volatility, skew, and use, skew, bonds, and volatility. But when you click on one of these, I mean, you'll be kind of shocked. You're like, wait, that goes all the way back into April. I knew skew would go back there. This is from a happy hour all the way in April of 2016. Pretty cool, right? So you have access to all of that. And I'll tell you what, options trading and so forth doesn't change. There's so much education in here. It's phenomenal. But at the same time, some of you guys, you'll never access that. You're just here to do what? Take some of the trade alerts. Okay. Before I continue anymore, by the way, I wanted to read off a couple of the names. Somebody asked me just a moment ago, they said, how do I know I'm enrolled? Okay. If you saw me mention on here, okay, I mentioned on here, 30 spots on the riskless deal. Well, here's the first batch of names. Josh S. from Colorado. These are individuals that have enrolled now. Josh S. from Colorado, Joseph L. from Florida, Russell G. from Wisconsin, Cheryl M. from Colorado, Douglas M. from New York, okay, Sylvain L. from Canada. Apologize if I butchered your name. Bradley A. from Alabama, Lewis L. from Louisiana, Roberto R. from New Jersey, Robert M. from Florida, Jeffrey W. from Nevada. So that's the first batch of individuals. I think they have about 10 or 12 names in there. It takes me about 7 minutes before I can actually see your name populate in here. So obviously some of you have enrolled. I might not be seeing it, but I just wanted to assure you we're going to see your enrollment kind of come through over here. So again, you gain access to everything we've done. Number 9, also critically important. Variations of the trades are available inside of an IRA. Retirement account as little as $2,000. Okay. Robert R., I see you. Okay. I see you actually in there. I don't see you populating in here yet. As I said, it takes about 7 minutes. So before I see you on the side, like the database has to kind of confirm who you are, has to actually confirm the email address and so forth. It takes me a couple of moments, and then it will populate in here. All right. So variations can be done in an IRA. And I always feel strongly about that because, I have a pretty good amount I'm in my mid 40s, but I built up a pretty good size IRA. And I've got IRAs that I trade in extensively. Everything that I talk about unequivocally can be done inside of an IRA. So it's important to me that gets, through to everybody. Number 10, we can help you get approved for options trading at several major brokers. One of the things we come up against is people go, well, I can't do that trade here. I can't do that trade. Somebody mentioned Fidelity. I can't do that trade. But you can. Now, I'm not going to say that you can do it at Fidelity. As I said a moment ago, I don't want to pick on Fidelity because, again, a long time in the brokerage industry, Fidelity's business doesn't want traders. They want investors. They want your money, okay, and assets under management. That's all they want. That's all they care about, which is fine. That's not our business. We are, trading. We want you, okay, to get trade alerts and to actively place those trade alerts. We work, okay, with almost all the major broker dealers. We do work with E-Trade. We do work with Tastyworks. We do work, of course, with both Charles Schwab, which is now TD Ameritrade, thinkorswim. We've even got inroads even at Robinhood and so forth. So every major broker dealer, okay, works pretty much with TheoTrade, but unequivocally. Like it says something when I'm trading on Tastyworks. If you don't know Tastyworks, this is the original founders of thinkorswim. They built a new platform. All right. And then there's, of course, thinkorswim. These are the two that I predominantly use on a day-to-day basis. right? So there's 30 riskless spots, as I was mentioning a moment ago. Get results, take action, enroll for TheoTrade now. There's no risk in enrolling for it. So, all right. By the way, somebody said the bonuses that are available. Okay, everything is kind of mentioned here: technical analysis, day trading, treasure chest, mindset mastery, quick start. Okay, and basically, when you come into TheoTrade, it's everything is encompassed on one site. Like literally, I make sure everything is on the site. And if there's something that you need in this business, and I really do take this to heart, there's something you need in this business that you feel that we're not providing to you on the educational front, on the trade alert front. If there's something you need in this business, email us. Like I want to hear about it because it's not too difficult to add it. We have 6,000 active individuals on the TheoTrade platform right now. That is, on a given day-to-day basis, right? We just have, dozens and dozens and dozens of people in here. And on a given basis, we have over 3,000 people that visit this chat room, okay? Doesn't stay live throughout the course of any given trading day. So it's great, okay? It's great. It's a wonderful community in here. By the way, I'll pop up that page again, apologize, and throw up the web address, okay? With that, if you have questions, we'll stay on here for a few minutes. It's theotrade.com/skew. If I did not read off your name, I do apologize. As I said, it takes about 7 minutes, but kind of already gone way over my time. I want to make sure everybody does get those questions, gets their questions answered. Okay. You will get everybody after you receive the confirmation credentials and so forth. I'll tell you where you can go. You can go right into TheoTrade. Okay. You can hop into the chat room, check it out a little bit. You can also go to the member home. Okay. When you go to member home, there's a little video giving you kind of a introduction. It's like a portfolio walkthrough of what to kind of find. I put this one together in 2001, but the website doesn't change all that much. So I'm reading the questions in real time there, Robert. I want to make sure everybody gets their question answers. A lot of people on here, but know that I'm actually reading through the questions. So just hop on here, go to the member home, and just watch the video, and then cruise like to member chat room. It's pretty easy to kind of navigate. Portfolios are a little weird first time you go in there because you're like, I don't even know what they're doing in here, but it's straightforward. Member chat room is kind of cool because you can kind of come in here and people, they kind of know each other in the chat room. Like this is a really, really tight knit community. So you kind of scroll through over here, get a feel for everybody that's in there, talk to them a little bit. Apparently we have a San Francisco 49er fan. Okay. There's one in every crowd. Anyway, with that, Kurt S. from California, John H. from New York. I'm just now seeing some more names come through. Listen, I want to thank each and every one of you for attending today. If you have any other questions, again, go to theotrade.com or support at theotrade.com, but theotrade.com/skew. You can enroll for this. Obviously, just click add to cart. Anyway, with that, I'll see everybody on the inside. I kick off TheoTrade on a day-to-day basis. I'm on right at market open. So if you are in Pacific time, I started about 6:22 Pacific time each day. That's 9:22 Eastern time each day. Be on for a full hour tomorrow morning. Thanks everybody for tuning in. Have a wonderful afternoon. By the way, I just saw one more name come through, Joe E. from Utah. I caught you, man. I caught you before I went off over here. Again, it takes a few minutes before it shows up in here. Thanks everybody. Feel free to hop on here and and fire some questions at us.